Hello. There are several ways in which the profitability of a supplier can be measured. You will hear people in finance talk about gross profit, operating profit, net profit, and even retained profit. But from a procurement perspective, the most important measure of a supplier's profitability is EBITDA. EBITDA is an acronym for earnings before interest, tax, depreciation, and amortization. It's a form of operating profit, and in this presentation I'm going to explain what it means and what you need to know for your CIPS professional exams. Now, you've probably heard of Alan Miltz's well-known saying, "Turnover is vanity, profit is sanity." It reminds us that we shouldn't be beguiled by a supplier's financial size. It's far more important for us to determine how they're performing on a day-to-day operational level. And to do that, we need to look at the supplier's EBITDA. So let's go back to the breakdown. Remember, EBITDA stands for earnings before interest, tax, depreciation, and amortization. The most important of all these words is the word before. In other words, if you want to find out the most accurate level of operating profit, i.e. the supplier's profit in its rawest and purest form, you need to calculate it before the accountants have played around with any adjustments. But what does this mean in practice? We know that to determine a supplier's profitability, you need to look at their income statement. I've talked about income statements in a separate one of these sessions, but put simply, this document will give you a financial account of all of the income and associated expenditure that a company incurs during an accounting period. Profit simply refers to the financial surplus that's left once all of the expenditure has been deducted from the income. And this relates directly to our first word, earnings, within EBITDA. The problem here is that without being more specific, an accountant can produce misleading figures. For example, you take the bank interest the supplier is paying on any of its loans, or the tax that it's required to pay on the profit it's earned. If you were to include these figures, the profit automatically looks smaller. For both of these figures, the financial department can come to an arrangement with its creditors, and if we were to include them, the true profit figure starts to become distorted. It's even worse with depreciation and amortization, both of which are adjustments relating to a change in balance sheet values from one year to another. Neither represent actual cash flows, and so again, their inclusion distorts our understanding of the underlying profit figure. Take, for example, one of your suppliers, and let's imagine that it makes $1 million profit last year, but also had its capital assets, equipment and machinery depreciate in value by $1 million. Would you be happy with this supplier reporting to you that they had made zero profit on your contract? That definitely would be misleading. And so we now return to the full meaning of EBITDA. We've concluded that we need to determine the supplier's operating profit before any of these accounting deductions, and so we can get a true picture of what their underlying profit is. In other words, we simply need to ensure that all direct and indirect operating costs are deducted from the income and identify this profit figure before any further deductions are made for interest, tax, depreciation, or amortization. So, if you're studying for your CIPS exams, it's important for you to remember this acronym and to understand why it's the most accurate measure of a supplier's operating profit. We're simply trying to avoid misleading financial adjustments made by accountants. Now, if you want to excel in your CIPS exam, then it will be really helpful to identify the EBITDA within a supplier's income statement. This will appear as a financial sum, but it could also be converted to a percentage of the overall sales turnover. You'll also find it helpful to make comparisons either year on year to get a trend, or with other suppliers in the same market to identify how your supplier is performing relative to its competitors. So I hope you found this presentation useful, and I do wish you well with your CIPS revision. Thanks for watching, and please remember to like and to subscribe for more CIPS exam revision tips.